All right, all right. I guess storms will not stop us from doing what we need to do. So welcome, everyone. This is State of the Real Estate Market. Truly appreciate everyone showing up and chiming in. So in today's episode, we are going to discuss why July really matters right now. So this is our mid-year follow-up and kind of getting you guys in the loop of what's going on mid-year. Uh, Situation as well as the opportunities that present themselves at the mid-year point. So that being said, let's go ahead and dive in and really see what we got going on. So why July? So June existing home sales slipped 2.4% from May, but stayed 2.8% above last year. So keep that in mind. We typically look month to month, and then we always look at year over year. National median existing home price hit an all-time high of 440,600. Mortgage rates climbed to 6.55%, the highest level in nearly a year. So we were kind of enjoying those interest rates kind of creeping down a little bit, but then we also started seeing them creep up. It's a number of factors that are involved with that, as you guys are aware or not aware, that it does depend on possibly being in a war or some battle that's going on right now. So some battling that's going on right now. So that definitely plays a role into the economy. Pending sales fell 5.4% in June, showing buyers are still payment sensitive. So as those prices or those rates go up a little bit, buyers are paying a bit more attention to it. This is something that we've discussed over the months, that you have more and more people now looking at the interest rates. They're really looking at the payment, that monthly investment that they're going to have to do. There's other things to really consider when you're buying a home nowadays, but we know what the masses are doing. They're really starting to pay attention to what those interest rates are doing. As we see those go up, it's not necessarily people are jumping off the fence. They're still hanging on to the fence as those interest rates go up. The opportunity is not in a frenzy. It is negotiation, discipline, and selectivity. So right now, people are taking their time. When they're making a decision, they're taking their time, they're really running the numbers and really seeing if it's going to be a good financial investment for them. And that's typically what it's about. So that's what we'll be covering in this episode. But moving forward, if this is your first time tuning in, welcome. If this is your first time tuning in, this is a platform that we not only talk about buying, selling, and investing in real estate, but we also talk about hot topics regarding entrepreneurship. We also talk about building generational wealth and talk about the things that are really going to get you going. So, how we do this and how we run things, we have a general agenda. We talk about the national snapshot of the real estate market at this time. We also talk about the Florida update because that's the state that I'm in. And then we go ahead and narrow it down to the Tampa Bay market. We typically focus on 3 counties just because it makes it a little bit easier and makes this process go by a little bit smoother. So we typically talk about Hillsborough, Pinellas, and Manatee County. Other surrounding counties are at times focused on it, but if you do have an interest and need more information, feel free to reach out. I have that information, that data as well, but we try to keep this state of the real estate market within the time frame. We don't have all day. We don't understand that attention spans are short these days. Mortgage rates, yes, we will talk about mortgage rates. Then we also tap into talking about our builders, development opportunities, and then supply chain that we have that's going on that's out there. Investing in commercial real estate. There's great opportunity, whether it's just single family or commercial real estate. There's opportunities out there, and we typically wrap it up with like a Q&A. A lot of times we have people that send in a few questions. If you notice, I'll probably pause in between a lot of my conversations just to kind of answer a few questions, just because that's typically those individuals that have already submitted some questions that they had regarding the market. And I'd like to include that into the report so it doesn't drag uh, the state of the real estate market episode for a long time. So with that being said, let's go ahead and dive in, guys. So the national snapshot, as you guys can see, national snapshot, some of the things that we like to go ahead and discuss is for existing home sales fell 2.4% from May to 4.09 million annual pace. So keep that in mind. There are people are being sensitive of what's going on. You see the sales were up 2.8% year over year. even though they were a little bit down for month over month, but year over year they are up. So keep that in mind. So the market is not frozen; it is still moving. There is still motion that's going on out there. So even though it, like I said, even though it fell from for the month period from May to June, keep in mind things are still moving because it's better than what it was last year. The South posted the largest regional sales pullback, down 3.6 from May. So three down 3.6%, and that's like the southern region of the United States. The message, this basically means that, hey guys, summer activity, it still exists, but buyers are still pushing back against the payment pressure just because they do see these interest rates being up there. And we understand that when you're kind of going to war, it does impact the economy, and people are a little cautious as in how they move forward with things. So the activity is softer, but it's still alive. So keep that in mind. Things are still moving, even though we are on a slower pace. National snapshot, record prices plus inventory stalling. So let's talk about some of these record prices. Record prices, when we say that, is the median record price that we're seeing, that it's up at a 440,600 and up year over year 1.8%. That marks the 36th straight month of annual price gains, so keep that in mind, which is a good thing. Inventory was 1.56 million units, down slightly from May, but 1.3% from last year. So, like I said, even for the month to month, it may show a little bit of pullback, but keep in mind the year over year, last year, we're doing better than what we were doing last year. So, it's always important to look at the information, but also expand what that information is telling us. So, month of supply is approximately about 4.6, better than the ultra tight markets, but not enough to reset affordability. So if you guys aren't familiar with the supply, month of supply of properties that we have on there, some people may refer this same conversation with days on market. Basically what that means is just that that's how much inventory that we have. You know, if we were to move forward today, 4.6 months. Typically when you have between 0 to 3 months supply, that kind of gives you more of an indication that you're in a seller's market. When you're getting over that 3 month supply, that's when you start shifting towards a buyer's market. That being said, that's why we say we're at 4.6, but we're not really at a point where it's extreme where you're going to start seeing prices drop and all kinds of havoc start breaking out. You're not going to see that. We haven't seen that. That's let me say that correctly. We have not seen that. So we're still not seeing the prices drop or plummet like some people were thinking. So we're still getting that back and forth, especially when those interest rates do decide to drop a little bit. So supply is better, but not enough. It's still not enough to really start shifting things around. Demand check. So pending sales fell in June. You know, it looks like things were a bit slow as we're looking at June and comparing things. It looks like things we did have a couple of decisions that were made regarding the current war that we're in or battle. However, we may say it, we know that we have soldiers that are out there. So blessings to those families and everyone else that's involved with that. But pending sales dropped 5.4 from May to an index level of 72.5. Contracts fell across all four United States regions. I usually show you guys that map. So keep that in mind all the way around, all four regions. Pending sales were also 0.3% lower than a year ago. So that's just a smidgen less. Keep that in mind. This confirms buyers are still reaching strongly to high rates, or excuse me, they're reacting to the high interest rates. Who wouldn't, especially when you were in a market where we were experiencing 3% and just below 3% for a lot of other people as well. So when you have grown up in that type of market, when you start seeing the interest rates go up, you're paying attention to it because you're just like, okay, I'm in a market to buy a home, but this is what I can afford. But I know uh, cousin Willie, they just purchased a home, hey, 5, 6 years ago, and they have twice the amount of homes. So what's the difference? Prices have gone up, inflation. So people are really starting to see the impact of inflation and seeing these prices as well as interest rates as they creep. So excuse me. So with that being said, buyer demand is there but fragile. So keep that in mind. Like I said, people are being cautious. They're taking their time and making these decisions as they're looking to move forward. Florida snapshot, more choice, more strategy. We understand when you have more options, things are happening. And if you guys recall in a previous, actually a previous couple of episodes, I've been making mention in regards to there's a lot of construction, especially in the Tampa Bay area, Central Florida area. There's a lot of construction going on, guys. And what I mean by that is it's like as I'm driving, viewing new communities, looking at different markets, you're seeing the land being cleared. You're seeing land being cleared. You're seeing roads being paved. And these are huge areas. And when I mean huge, I mean like you're having, it's not going to be like a community of like 30 homes. You're looking at communities of a few hundred homes, 1,000 homes. So that's a lot of activity. It's a lot of development. That takes a lot of time and planning. That means that's a lot of homes that are coming as well. You're starting to see communities, not only are they just doing single family homes, but they're doing townhomes, and then even including apartments. I'm starting to see that a lot where you're seeing communities being developed, but it's this huge, you got this huge, massive area. When I say community, I mean like just about a whole new town. It seems like a portion of a whole new town. But you're seeing hospitals being built. You're seeing um, apartments being built, 4-story apartment buildings being built. You're seeing commercial facilities, commercial buildings being built. And what I mean by that, there are other uh, medical facilities, financial institutions. You're seeing restaurants being built up. You're seeing plazas that have different shops and services to offer to people. So it's a lot that's coming, especially in the Tampa Bay area. We have a booming area, Waimama Parish, um, Tampa, Riverview, Ruskin. Then you can even go north of there, Wesley Chapel, Polk County. You have Lakeland. All of those areas are really starting to blossom in a lot of areas where people would, when you would drive by them on the highway, just like, okay, just look at the cows, guy. This is where you guys get to see the cows, but or the big fields of different plants or foods or harvests that people may have. So keep that in mind. But more choices, more strategy. Realtor.com says that June Florida data showed that 425,000 median list price and 395 median sold price. So keep that in mind. So there's a shift there. So even though it was listed at 425, homes that are selling are a little bit less, or the people are negotiating down to 395. Florida had roughly 299,700 active listings and 75 median days on market. So if you're thinking about placing your property on the market, it's about understanding what things are going on right now in the market. And that being said, expect to be on the market for a few months. Don't expect a lot of activity where as soon as you put a home on the market, you got people knocking down the door. People are putting up contracts, multiple showings, multiple offers. 75 days is, it makes you, it softens up the seller a little bit, put it that way. And you're on the market for 75 days, the seller will soften up a little bit. So statewide median sold price was up 1.54 year over year, while median listing price was down 2.33%. So keep in mind, this is the Florida market, guys. Remember I said I go from a national Florida and then to the Tampa Bay. Translation, sellers are adjusting expectations, but closed prices have not fallen apart. So even though prices have come down a little bit, as in what they're actually closing at, it's not like a ridiculous reduction. So keep that in mind. So those who are thinking that things are crashing, that you can come in and offer 50, 60,000 less than asking, come on. We're not at that point in life, and that's not what sellers are expecting right now, especially when they know they can hold on to their properties unless they really have to sell. So Florida is normalizing, and it is definitely not collapsing. So keep that in mind. And I said they know something, guys. When you drive around, especially in the Tampa Bay area, and you see this amount of homes that are being built, and then you see the land that's being cleared for new communities. Not just, like I said, when I say communities, I mean like hundreds, if not thousands of homes that are being built in like one area. And when you see these multiple communities along these major routes that used to be total cow pastures, you're like, okay, there's going to be thousands of homes built in there. And then when you see these 4-story apartment buildings, they're coming with over 300 units themselves. So you got to figure 300 units in an apartment. It's kind of, they have the transition. You live in an apartment and you could probably transition to one of the townhomes when somebody's looking to sell, and the townhome folks are looking at the single family homes. Everything's in there, that area, schools, restaurants, hospitals, and even jobs, so that's with a lot of people working from home, this is the impact that it has. So a lot of companies don't have to be superly local, but if they are local, I'm sure there's some flexibility with people working from home and when they have to report to the office. Maybe like a 3 days in the office, 2 days at home. So keep that in mind. So the Florida segment, watch. These are things that we're watching. Homes versus condos. We're always talking about homes versus condos. Florida single family demand has been more resilient than condos. Yes, it has. I definitely have experienced that. I've seen it just because a lot has to do not only with the interest rates, but also the storm situation that we went through in the Central Florida area, as well as these interest rates. You see the interest rates, people are paying new guidelines that are being placed onto the condos, maybe not as much as you may see with the single family new guidelines. So May statewide data show that single family closed sales up 0.6% year over year, condo and townhomes up 6.6%. Ooh. So seeing movement in there. So things that people are adjusting. Sellers are adjusting. Trust me, they are. The higher prices that they may have been asking for, they are softening up a bit. Single family median was 425,000. Condo townhouse median was $306,990. Condos still carry extra friction, HOA fees, reserves, insurance, financing standards. Yes, there's a lot more that goes into the condo. So even though you may see a great price, you also want to consider the fees that are involved. Like right now, I have turnkey properties that are available and they're condos at 107,000. Great price, but also keep in mind you got to look at the fees that are involved. So when I tell people that they have a strong interest in it, okay, well let's calculate the fees that are also involved. Let's make sure it makes sense. Then what you would have to make sure what you're going to expect to get on your return. So keep that in mind. Do not confuse a lower price with a better deal. And that's the main thing. You got to look at what's involved. Even though it's a lower price, what else is involved? Are there fees, especially in these condos, communities? There's different fees that are involved. So keep that in mind. And also, if you are buying any type of townhome condos, 3 stories or more, make sure that the required inspections have been taken care of, and that you're also looking at any of the possible assessments coming down the pipeline, if there are any that are coming that are foreseeable coming down the pipeline with those type of properties. So the condo story needs sharper underwriting. That's basically what it is. It's just that you're not just looking at the price, you're really looking at all the other fees to make sure it works for your situation. So Tampa Bay snapshot, yes, yes, yes. So we'll breeze through this, but like I said, with the Tampa Bay snapshot, I'd like to focus on Hillsborough, Pinellas, and Manatee. So local numbers equal the local authority. That's what I'm a part of. That's what I keep my eyes on. So Hillsborough, the broadest transaction base, buyers still active, but they are more sensitive to payment and value. Yes, they're looking at that payment and then what they're getting for that as well. Like I said, what people were able to get, for interest rates that were 3% or a little bit less than 3%, they're getting 2,000 square foot feet home versus now they're looking at maybe a 1,400 square foot home, and then the price point is significantly more. So these are things that people are aware of that are from the local market, but people that are transitioning into the market, they're not familiar with the local market, and to them, compared to their market, it may be a better opportunity for them just to still come to this area. So that's why prices have not plummeted in the Tampa Bay area, and buyers are still buying. Across all 3 counties, the market rewards accurate pricing, clean presentation, and real negotiation skill. Yeah, it does take some negotiations. At the same time, it does take the opportunity for you to get people to the property. Keep these properties clean. Use professional pictures if you're getting your home listed. Add, show the amenities. Pictures. People are looking at what does the community have to offer. That's very local, where I don't have to travel a long distance, especially with gas prices. People are really considering, the different amenities moving forward. Manatee more rate and builder sensitive. Yes. Watch new construction incentives, price reductions, and days on market. New construction incentives are ridiculous right now, guys. I mean, opportunity is out there, but so don't completely ignore the incentives that are being offered, but also don't completely ignore the resale, because a lot of these resale homes, they have all of the bells and whistles that maybe a new construction home doesn't have. But what happens is, how new construction works is their goal is marketing. They're going to get you in the door. They're going to get you interested. And when you compare apples with apples, you may find some differences in there depending on what you're looking for. So I have a client right now, we're working on getting their property sold. It's a resale, but they have all of the bells and whistles. They spent all of the money to have these upgrades done to this property. Over, I think, almost $80,000 worth of upgrades done to the property. Now, for someone that's buying new construction, they would have to pay for all of those upgrades. And the base model does not come. And then they also have to worry about the amount of time it's going to take for the property to actually get done. Is it ready now versus later? So keep that in mind. And then, it's an emotional process. So when somebody's looking at a home that's resale, it really has to present itself well. It really has to feel very homely, and not the seller's home. If you get what I'm saying. So really make it feel really homely where anybody can feel welcome when they do come. If you do have a property that's on the market, maintain that. Like I said, we're on the market, days on market. I think it was 70 something days. So over almost 3 months, not quite, almost 3 months, over 2 months of being on the market. So keep that in mind as your property may be on the market for sale. We want to make sure that things are getting done. Okay. And maintaining that motivation has to stay as a seller. So keep that in mind. All right. So mortgage rates. Let's talk about some of these mortgages. You guys have been really hounding me about the mortgages, and I understand the mortgage rate is up, back to where it was a little while ago. People were starting to get comfortable. They started seeing them come down, thinking that they were going to continue to come down, especially for the summertime, which is typically the seller season. But keep in mind, this is what I call we're in a period where war is present, is out there. So when the war is out there, the country going to war, it impacts the economy. All kinds of things happen. Prices go up, gas prices. We've been seeing it. So Freddie Mac reported that the 30-year fixed at 6.55% mid-July, highest in nearly a year. The 15-year fixed average is about 5.93%. Rates have reversed from the sub 6% window earlier, um, this year. So I remember we were looking at some sub 6%, and people were getting off the fence. And some people were like, oh, just go ahead and take my time. But like I said, guys, you have to get ready. Stay ready so you don't have to get ready. Keep that in mind. If you're not ready right now, go ahead and begin the process of getting ready. And when you are ready, stay ready, because these opportunities are going to present themselves. Most forecasts now expect rates to stay in the low to mid 6% range through the rest of 2026. So if you're in the market, that's what we're looking at. So build for 6% plus, not hope. And that's basically what it is, guys. Stop waiting for this 5% to happen, and that's when you're going to jump into the market. Go ahead and see how things are now, how it applies to your current market. If it does, if you pick up a property now and it does drop to that 5%, you can always refinance it to that better rate. That way, your monthly, but you'll have the property that you want. So keep that in mind. Keep that in mind. Financing strategies make the deal work on today's terms. And that's exactly what I was just talking about. Make the numbers work with today's terms and not so much with the hopes of something to happen later on down the road. If it does happen, you know when to react versus, hey, I'm wishing and hoping that it does happen so I can get out of this situation. Make it work with today's numbers. That's where a lot of people get in financial stress and financial situations when they go into a deal with that type of mindset. So keep in mind, make it work with today's numbers. Make it work, make it work, make it work. So use seller credits to reduce cash to close or buy down the rate. Always a great negotiation point. Compare resale homes against buyer incentives and inventory home pricing. I just said that, guys. Look at some of these resale homes. Look, really compare them. Just don't look at that top number, but really compare them. Really look at what you're trying to do, especially if you're trying to move during the summertime. If you're looking at new construction, it's going to take some months before that property is done. So, can you really wait that long? Then it also comes down to, if you have to wait that long, what are you going to do? You're going to rent a house? For short-term rentals are what, double the market price, and we already know rental prices are up there. So keep that in mind. Are you really saving or not? what's the true motivation? Logic and emotions, we understand when people are buying homes, logic and emotions, that plays a big role into it. So keep that in mind. Shop multiple lenders. Rate and fee differences matter more in this environment. Yes, it does. So if you have a bank that you've been working with, a lot of people typically go to the bank that they've been banking with for years, kind of seeing what's being offered. I encourage you and strongly encourage you to continue looking and look for other options to kind of see what type of affordability is out there. Look at these rates. Make these people compete. Okay. Excuse me. When I say people, I mean these banks. Make the banks compete. If you're not part of a credit union, usually credit unions have some different opportunities that are available. You have your big banks that have different opportunities that are available as well. So pay attention to them both. Prioritize payment that supports your peace of mind, not max approval. Yes. Do not stress yourselves out by getting the max approval, guys. Okay. Uh, just because you are approved for 500,000 doesn't necessarily mean that you need to look for every $500,000 home. Understand what you're looking for in a home when you're on the purchasing side, and make sure it works for you and your family. Health is wealth. I'm always telling you guys about health is wealth. I enjoy this a lot. A home should build stability, not chronic money anxiety. Ooh, that was a good one. I must have come up with that one. Ooh. Uh, Keep that in mind, guys. Home, when you have a home, it's uh, let me talk to the people for a second. So let me talk to you guys. So when you guys are purchasing a home, if you're in the market for a home, it's a home, not a house. It's a home. Home means stability. This is where the blessings are passed down. This is where opportunity for growth, stability is within the home. That's the main thing of getting a home. That's what you want. And not the pressures of the financial pressures, the financial stress, the anxiety. You want to be, when you come to your home, you want to be able to come there and relax. That's what it's all about. But at the same time, we understand what's going on. You're looking to try. You deserve it, and I truly understand. But completely understand that you deserve it. You work hard. You've been working hard. Your family deserves it. But at the same time, do not place the stress and the anxiety on yourself, where you have to continuously perform at un unknown levels of financial stress. So don't do that to yourself. So structure beats speculation. That's all I have to say. Structure beat speculation. Run the numbers, get multiple lenders to look at the opportunities for you. And that is what's going to help you out in today's market. So keep that in mind, guys. So builder and supply. This is always something that I always tell people, the supply. And this is like the supply of homes. Keep that in mind, guys. So new homes can be more flexible than resale homes because builders need more inventory. So what I mean by that, and what's being described by that is these builders have crazy incentives, whether it be the actual money that you have to pay towards upgrades, money towards closing costs, or even the interest rate. It's very competitive out there. So keep that in mind. Buyer incentives may include rate buy downs, closing costs, credits, upgrades, and price reductions. And the Sun Belt markets remain especially important because more supply has come online. And that basically, like I said, I've driven through communities where these new homes are coming. Like they're like hundreds of acres of land that is being cleared at a time. Hundreds of acres of land that are being cleared. The roads are already paved. So they're just building the homes one by one. So the communities are there. It's coming. It's happening. Keep that in mind. The supply is coming. So what that means is it's going to be some. It's not so much supply that you have. Um, you're really strongly competing. The market is still controlled by the seller, in a sense. They're being softer with the negotiations. Trust me, they are. The key is to compare the full package: price, rate, incentives, tax, HOA, and commute. You gotta look at the whole thing nowadays. So it's not just, hey, I got a home finally because the inventory was so low. If I waited, I wouldn't have had a home at all. So now you have the opportunity to take a little bit of a breather, really look at the incentives that are offered by the community, how close it is to shopping, how close it is to work if you are commuting. Keep that in mind. So mid-year positioning check. So buyers, more choices, more negotiation. payment discipline for my sellers, pricing accurately, making sure that you're not still living in those pandemic numbers. Expect sharper buyers. Yeah, buyers are taking their time. They have more time to negotiate. They have more time to do research. AI is off the chain, so AI is helping them present their best offers at this time. Investors, my investors, please do not make these mistakes during these times. I've continuously told you guys to really run the numbers. Just don't use these tools that are these free tools that are out there that you keep running the numbers on, and you find out that you have these tools, but you don't know how to use them. So to stop being fancy, really understand and ask the questions. Working with people, if you're newer to the investment world, make sure you're working with people who can help you underwrite and really look at the different things that you need to look at or consider when you're purchasing a home. So prior to prioritizing cash flow, avoid weak assumptions. Yes, avoid that. Cash flow is going to be very important. Also, keeping in mind if you are looking at the cash flow and you're getting a rental, you're expecting a certain amount of rental rate. Also, run your numbers where what happens if there's a 20% decrease in the amount of rent that you're receiving. So, um, just running the numbers, if you're receiving 1,000, but all of a sudden now you're receiving 800, or I don't know whose rent is at 1,000, but you guys get what I'm saying. So just run the numbers at a 20% reduction just in case it helps. If your numbers still work even at that, then you know it's a super strong deal for you to possibly invest in. But make sure you're running your numbers. Investing in 2026, smart money, not fast money. Yes. And that basically means, guys, you're looking at the cash flow, expense control, you're looking at the insurance taxes, HOA. Keeping in mind, especially if you're buying these investment properties and it was previously owner occupied, the taxes, when you're doing those numbers, the taxes are pretty low because they may have homesteaded the property. That being said, as an investor, you can't homestead that property. That property won't be homesteaded. So that means those taxes are going to be jumping up. So keep that in mind. Mispriced inventory and selective redevelopment are better targets than emotional bidding. Yes, 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 yes. If the deal only works with perfect rent growth and perfect rate, it does not work. Yeah. Yeah. Like I said, that whole 20% reduction, that's just kind of giving you a little bit of a stress test. That's what I like to call it, a stress test. So the numbers need to work before closing. Don't make them work after the fact because you're going to be in a situation. You don't want to be in a financial situation. So as we getting closer here, as we get closer to the wrap up time here, guys, um, commercial real estate where smart money is moving. I know, like in the Tampa Bay market, it commercial is still a big deal, especially in the industrial and multi-unit. You're getting a lot of multi-units deals that are being completed. So, commercial rental rate wise, you have a lot of places that are reducing their rate because they need to get occupancy. Um, so I think somebody said $0 or 0% of $200,000 is still, you know, you get what I'm saying. If you don't have the deal's not there. If you have $0, if you have 20% of $0, that's still $0. So at the end of the day, it's about getting people to occupy the properties. Let's get the cash flow going, keeping that in mind. So commercial real estate capital remains selective with investors favoring income infrastructure and quality, yes. Multifamily and industrial logistics remain core targets. Yep. Yep. Multifamily and industrial. Data centers are still a major growth story because AI demand is driving leasing. Yeah, so these data centers are very important. They're getting a little bit of pushback, especially when they're starting to end up in random communities, and people care about what these data centers are going to do now, possibly also future health situations, if there is a health situation. It's just like when you're bringing that stuff to a new community, people have a voice, and their voices can be heard these days. Warehouse constructions was started to pick up again, showing renewed confidence in industrial demand. Yeah, if you guys are following me, you'll probably see me myself posting a couple of real estate opportunities, especially on the commercial side, that have been posted. There's a lot going on the commercial side, and I say that because it's coming, especially in the Tampa Bay area. It is coming. A lot of it's already here. So, for those who know my partial relationship with Cushman and Wakefield, I had an opportunity to do an internship with them, and just seeing some of the things that they're doing within the Tampa Bay area, and that's a global company in itself. But just seeing what they're doing in the Tampa Bay area is phenomenal. And that was years ago that I did this internship, and for me to see it actually happening now, it's like wow, I didn't realize how far ahead I was of receiving that knowledge. So why Tampa Bay still matters. So Tampa Bay investment story remains bigger than single family housing. Population growth, business migration, logistics, and housing demand keep the region in the conversation. Yes, jobs are coming to the Tampa Bay area. More people are coming to the Tampa Bay area. Multifamily industrial are still the strongest local commercial, commercial real estate narratives. Local investors should stay disciplined, and the region is attractive, but not every deal is. Yeah, keep that in mind, guys. Even though the Tampa Bay area is very attractive, make sure your deal is mathing. Make sure the math is mathing. Make sure you guys are doing that. So July takeaway. So basically, with the mid-year reset and with the summer opportunities that are there, guys, this is what we're looking at. I like to get upfront with you guys. So this is what we're looking at for the July takeaway. The market is not easy, but it is not dead. You understand that inventory is better, but affordability remains stressed. It is stressed. The prices are definitely up there. Buyers have leverage, but only if they are prepared. Sellers can still win, but they cannot ignore pricing discipline. Investors should chase durable numbers. Durable. And what I mean by that, don't follow the trends or the hype. Don't follow the hype. Make sure the numbers are numbering. The math is math, and preparation is the advantage. Make sure that you understand what you're looking for when you're looking for these investment properties, because those opportunities are going to present themselves. So, for those who are kind of chiming in for the first time, if you've ever contacted me directly, I've had a number of people contact me directly. If they're looking at deals and they want to consider partnering, hey, feel free to reach out to me. Or if you need some information, I generally, yeah, I'm open to giving you some information on different opportunities that may present themselves. You guys can feel free to message me if you guys want to send some alerts out to me. I have people that text me, people that DM me, people that email me. So also feel free to book a 101 with me, 30-minute. There's no pressure, no obligation. I always do that for people just kind of as they're getting their bearings together, as they're trying to get things settled. If you're considering investing in real estate, if you're considering selling your home, really set up a one-on-one. Let's talk with opportunities, and let's talk about what the market really is doing, especially how the market is now. It's hyper local, so it may be your specific community may be booming, but elsewhere it may not be. So let's talk about that transition. And also what that transition looks like. If you sell your current home right now, where are you moving to? You want to stay in the area, or are you planning on moving far away? Those are some of the logistics that we definitely need to talk about. Register for next month's state of the real estate market. That information should be going out. If you have not registered for the next month, or if you didn't register for this month's, be sure to pay attention, continue to follow, register, because what happens is when your email is in that portal, you'll get updates of the other events that are going on as well. So be sure to do that. Provide your information. Don't just watch the market. Build a plan. That just don't watch the market. Build a plan. Okay, guys. Don't just watch the market, build a plan. Let's make things happen. Welcome. Like I said before, if this is your first time or you haven't done so before, be sure to like, subscribe, share this information with someone else that is considering the real estate market right now, and they want a different insight and more straightforward insight as in what's going on. And if you have something that's a bit more specific, feel free to set up a one-on-one. Be more than happy. If you guys are my investors that are looking for turnkey properties, feel free to reach out to me. I have a few properties that are available, as well as some properties that are available that are resale. So let's keep that in mind. If you guys are in the market for resale, contact me. Once again, guys, hey, this is State of Real Estate Market, the July mid-year update, and opportunities that are presenting themselves. Thanks for tuning in, and until next month, take care.